a lot about each of them, maybe just a sentence. But what I do want to say is that these are the people that are responsible. And I see now a recording sign has come up. So hopefully that means we're all set to go. And as we are here in the broadband community talking about the changes to the letter of credit, these are the people who really are responsible behind the scenes or in front of the scenes, as the case may be, for these recent changes that were announced 8 days ago by NTIA. So for a year and a half since the NOFO was, the Notice of Funding Opportunity was issued, there has been a lot of questions raised. This was sort of one of the high point or concern points or pain points is probably the best word that many small non-incumbent providers had about participating in the BEAD program. And it's been asked again and again. And I did a post in the community earlier highlighting just how frequently and how much this question came up. And then after kind of a long period of time, we finally got some answers and indeed hints that there was going to be a change. And again, the change was made. And that's why we're here. We're here to talk about what was changed, maybe something on why it was changed, if you'd like to talk about that. But equally and probably most importantly, what's next, right? What's next on letter of credit and performance bond? What are the issues that you are dealing with as you prepare your BEAD applications as part of the state applicant process? So with that, I'm going to, again, turn to each of our panelists. We're going to go in this order. Gigi Sohn, who is a senior fellow at the Benton Institute still. This has had that hat for a long time, but her more recent, very exciting hat is the head of the American Association for Public Broadband. So Gigi, thanks and welcome to you for being here and part of this discussion. Following Gigi, each of our seven will give up to 3-minute opening remarks, and that will leave lots of time for questions about this in the community here. Following Gigi, we're going to hear from John Windhausen, who's the executive director of the Schools, Health, and Libraries Broadband Coalition. And John, again, been tireless on the issues that anchor institutions face in BEAD and other programs. Following John will be Philip Macres. I hope I got that right, Phil. Thank you for being with us. He's the principal at Klein Law Group, and he counsels broadband providers on increasing profitability, reducing risk, and furthering their objectives. And he leads a coalition that has sought exactly these alternatives. Following Phil, we'll hear from Quinn Jordan. Quinn is the head of the Mississippi, I think it's the Mississippi Broadband Association. And we're so looking forward to Quinn's observations on this from his perspective in helping to bridge the digital divide for all Mississippians. Following Quinn, we're going to hear from Calum Cameron, who leads the communications at Connect Humanity. And Connect Humanity is a really interesting organization. I'm ashamed to admit I didn't know about it until about a year and a half ago, but it's doing a lot of great work in merging the nonprofit space and the financial space. And so they call themselves a nonprofit impact fund backing community-focused ISPs. And so we look forward to your thoughts on this. And then batting cleanup will be Charles Thomas. Thank you, Charles, for joining us. He's been in the telecom and broadband space since 2016. And over these past 7 years, he's been director of operations at 2 separate ISPs. So, Gigi, let's turn it over to you for the thoughts you have on the changes that have been made.
Well, I want to ask whether it made sense for you to maybe tick through the 4 changes. I mean, I can do that if you.
Why don't you do it? No, you go ahead and do it, Gigi.
Well, let me first say thank you for convening this, and thank you for arranging it around my ridiculous travel schedule these days. So thank you, Drew. Appreciate that. Also, just very quickly want to thank not only the folks on this call. We've been working hand in glove together. I mean, I've only really been working on it since August, but people like Phil and others, Elizabeth, Quinn, have been working on it probably since February. So if anybody tells you this is an issue that was just brought to the attention of NTIA, It's been much longer than that, but it's taken a lot of hard work, and we got it done. And there are other folks as well. It's mostly the people on this call that really raised the alarm. That 300 signatory letter, which Calum drafted, really, I think, caught the attention of an awful lot of people, not just NTIA, but the White House and others. And I do want to thank NTIA as well. They listened. It took them a little while. I think it took a little while for it to bubble up to the very top of the leadership. But once it did, I think they realized that the letter of credit requirement was going to actually work against the BEAD's goals, right? And the goal is to get everybody connected and to have a wide range of ISPs do that, with the understanding that, you can give all the money to the big guys, but they're not going to go to the little cities and towns. They're not going to go to the most rural areas. It's not worth it for them. Okay. It doesn't lead to greater ROI and all that kind of stuff. So you need to have people like the folks on this call, people like my members who are engaged as well. But if you throw up this impossible financial barrier, it's not going to happen. So I'm going to take just the 30 seconds to quickly tick through the 5 alternatives, and then I'll have one other thing to say, and then I'll turn it over to my terrific colleagues. So the alternatives, and I'm not going to get into the weeds, I'm just going to tick them off very, very quickly. So basically, what NTIA is saying, we're going to have a sort of catch-all, what they call a programmatic waiver. So, a waiver to the BEAD letter of credit requirement. First is, instead of just being having to get a letter of credit from a Weiss B- rated bank, you could now get a letter of credit from credit union. So it's opening up the types of entities you can get a letter of credit from. And I'm just going to say right now, I'd like to see it be broader. But the banking industry is in turmoil right now. There's not a lot of liquidity. Wells Fargo and Bank of America are lower than Weiss B- rating. And I think NTI realized that if we're going to just stick with that hard and fast rule, that's going to be problematic. Mm-hmm. Second is the subgrantee now has an option to use performance bonds, and that is something that we asked for in that 300 signatory letter. Third, the subgrantee, the letter of credit and or performance bond will reduce. You'd still need it at the beginning, which is different from the RDOF, but it would go down every time that a subgrantee or ISP hits particular milestone. So that is something that the RDOF program did, and something that they've somewhat copied here, and we can get into the details later. And the final option number 4, is that there could be a much smaller letter of credit or performance bond, just 10%, if the state issues funding on a reimbursable basis, okay, and if the reimbursement is for periods of no more than 6 months. So that's also something that I think people were very, very happy with. Again, you still have to have either a performance bond or a letter of credit for 10% at the outset, but it's obviously a lot smaller than 25%. So that's really the options in a nutshell. I'll let my colleagues expand upon them. I will say this is a great start. I want to thank NTIA. I'm also thankful that NTIA has recognized that it needs to continue to be flexible. Some of my members would like to give the state a little bit more, power to decide whether a letter of credit is necessary at all. Or for the state to kind of be the grantor of the surety and the performance bond. So there are still going to be some conversations, and I'm glad that NTIA is going to continue to look at market, how things are moving in the market, particularly with the banking sector. And I know Quinn can talk a lot about that, to make sure that these entities represented on this webinar can still participate. So this is a great beginning, but we will be looking for more guidance in the future. and particularly for the public broadband entities, the NOFO actually calls for such guidance. I won't get into the details, but look on page 72, section 2A, and you can read it for yourself.
So Gigi, thank you for taking that extra time to do this. And if I can just recap, those 4 points are really important to nail down and make sure they got them. The first point was that as long as it's a WISE B- or better, credit unions can now issue a letter of credit, and maybe there was more in there. So the B- entity. The second was the performance bond, which we definitely want to talk more about. They're allowable in lieu of letters of credit. The third was about I think it was the is it the step down coverage upon completing milestones?
Upon completing certain milestones, the letter of credit can be reduced.
And then the fourth was state funding BEAD on reimbursable basis can dial the knobs of the coverage levels. Again, just make sure we understand what does that mean? How does that impact the requirement that there's the match funding for 25%?
It doesn't.
Okay.
The match requirement's not going away. And obviously the combination of the 25% letter of credit and the 25% match, that's really what was the killer for a lot of these smaller entities. But fortunately or unfortunately, whatever way you want to slice it, the match component, it's not going away.
Well, and as I said in another post, the key difference between the match funding and the letter of credit is that a match is amplifying the dollars that are spent on broadband, and a letter of credit is just purely contracting. It's just
absolutely. The costs are not, as Elizabeth and others will explain, the costs are not nominal, and it takes away from the actual build out. Yes.
Wonderful. Thanks, Gigi. Let's turn to John Windhausen to give your perspective on this, John.
All right. Well, thank you very much, Drew. It's good to be with all of you. Thanks for putting this session together. I'll contribute my thoughts in the form of a story, because when Phil first brought this issue to our attention in the spring, it really sounded like Phil's arguments made a lot of sense. And then I heard Phil and Elizabeth talk about it at a conference over the summer, and they made even more sense then that this was going to discriminate against smaller and nonprofit providers. And then I attended another conference where I heard NTIA try to justify the letter of credit, and their main argument for backing the letter of credit is that, that's what the FCC did for the RDOF. Well, that's not a good argument, because the RDOF was not a model that we want to adhere to. So it all kind of made sense to me that the letter of credit requirement really ruled out the opportunity for smaller nonprofit ISPs and women-owned ISPs, minority-owned ISPs, and it flies in the face of the legislation for the BEAD program, which specifically called for municipalities and nonprofits to be eligible for BEAD funding. But the letter of credit would have taken that away from those entities. So there really seemed to be a disconnect. The question I had was, well, is this a big issue for anchor institutions and Shelby members? And I wasn't so sure, but I drafted comments to NTIA to submit in August because the OMB had opened up a process to consider the NTIA's rules. I drafted up some comments articulating our asking for NTIA to waive or eliminate the letter of credit. And holy cow, in just 24 hours, we had 47 Shelby members who signed on to those comments. And it really exploded in terms of the numbers, and also my interest level then became really high because I realized, hey, this is really critical. And the signatories were schools and libraries and higher education and research and education networks, as well as ISPs. And then to top it all off, we had a couple of state broadband officials also signed on to our comments. So after that, I set up a phone call, Zoom meeting with Jade Piros from Kansas and myself and a White House official to try to raise attention to our comments. I don't know that anybody read our comments, but I sure know that as soon as Gigi Sohn got involved, this issue really started to take hold. And that's when, because the White House has such enormous respect for Gigi, that, I think that's when things began at NTIA to turn things around. But I'm very pleased with the result that we've achieved so far. I want to call attention to just one additional issue. Drew and Gigi both identified the 4 different criteria that NTIA issued in that waiver. But there's one additional sentence in the blog post that I'd like to call attention to, because that one sentence also says NTIA will allow the states to have additional flexibility to waive even these 4 requirements on a case-by-case basis. So I think that means that it's even, that our success is even broader than just those 4 criteria or 4 criteria that were announced earlier. So I think it indicates a much more open-mindedness on the part of NTIA, and I really congratulate them for listening to us and taking action to try to solve this problem.
Can you just repeat, let's call it a 5th point, John. Can you just repeat that 5th point from the blog post?
I'll bring it up before the end of this call and share it exactly, but it's to the nature of the statement is that NTIA will give states greater flexibility on a case-by-case basis to waive the letter of credit requirement even further. Okay.
Very good. Let's turn now to Phil, then Quinn. Then I have to go introduce a panelist, Elizabeth Bowles, who has also been very instrumental in this. So Phil, let's hear from you, and then Quinn. And Phil, thanks for your leadership on this. This is great to kind of hear this story as it unfolds, if you will. So how did you get so into this, Phil? And tell us where your thoughts are right now on it.
Well, first of all, thank you, Drew, for putting this together and putting me on this call. It's great to see the letter of credit dream team, challenge team on this call. I wholeheartedly applaud NTIA's adoption of the programmatic waiver of the letter of credit requirement. The waiver allows many more entities to participate that would have otherwise been left on the sidelines. But mind you, getting this result was really no easy task. Just to give you a little bit of history, over a year ago, we realized the letter of credit requirement under NTIA's BEAD program, NTIA's middle mile program, was entirely too daunting for some of our ISP clients, and knew immediately that a similar requirement in the BEAD program was going to be hugely problematic as well. In the middle mile program, we were looking at, considering a $60 million build, and between the letter of credit and the match that we had to come up with, that equaled about 30 million of the 60 million. And that was before the first reimbursement check, because after you put that up, you still have to, shovels to the ground. You have to spend a bunch of money before you seek reimbursement. So you have more of an outlay. So that all seemed ridiculous. We realized that was hugely problematic. Others told us that the letter of credit was not an issue, and they basically marginalized our concerns. But we would not accept that. So we set upon a path to seek change and alternatives by forming a coalition of like-minded ISPs who were facing the brunt of this problem. Now, after getting support from Congressman Harris in September of 2022, who sent a letter to the Department of Commerce Secretary identifying problems with the letter of credit and seeking alternatives, along with other letter writing and participating on webinars, panels earlier this year, Elizabeth and others did great jobs on panels and webinars and educating the industry about the issues with the letter of credit. And then ultimately, upon NTIA's announcement to allocate funding to the states on June 26th this year, we realized it was time to put the pressure on. We questioned why we should be celebrating the huge White House June 26th announcement of state funding allocations when the letter of credit in the BEAD program was designed to prevent most small, minority-owned, and women-owned businesses from participating in the program. So after that, through a collaborative effort of almost 300 stakeholders and Gigi Sohn's involvement, thank you, Gigi, I can't thank you enough, we sent that letter out along with Calum and Connect Humanity. Great work on that and getting the press out and getting all the blogs out. We sent the September 6th letter and coordinated other grassroots outreach. So, we commend the Department of Commerce and NTIA leadership for hearing and promptly addressing the concerns of the group of stakeholders. Indeed, upon understanding the gravity of the issues of the letter of credit requirement, leadership swiftly acted to rectify the problems. And so this does so much to encourage robust participation from internet service providers of all types and all sizes. Everyone benefits from this, The small, medium, and large. Everybody should benefit from these. The programmatic waiver that was adopted by NTIA. So it was an incredible team effort of our stakeholders to get NTIA to adopt the waiver, which likely would have never occurred but for our group letter. So thank you, NTIA, for listening and acting. And with that concludes my opening statement, but I look forward to hearing from others on the panel.
Yeah, no, what we're going to drill in. Okay, let's turn to Quinn. Tell us a little bit about your experience here. Thanks for keeping to 3 minutes, Phil. Let's try to do that. The previous ones got absolutions because they were drilling into particular subjects, but let's keep it so we have as much time as possible for questions. So Quinn, go ahead.
Well, good morning, and thank you, Drew, for having this coalition and these representatives from the coalition. And one of the biggest things that I'd like to say is that the group really gelled. There were some good discussions that was had and led by the committee, but it was a thing that's really grassroots for us at MSBA. And so MSBA is a Mississippi Broadband Association, and we really looked at how the BEAD program was being written and implemented and how it affected the small to medium ISPs, but quite honestly, the medium to large as well in Mississippi, and the barriers to entry that it created with the compiling of the 25% letter of credit and the 25% matching funds. So we stepped back and we said, okay, who is going to reach rural America or rural Mississippi? And it's going to be those that have that vested interest, that has a lower overhead, that can go out and really invest in these small communities. And by those two barriers to entry there, it really negated their opportunity to be successful. It absolutely did. And so when talking to my small to medium ISPs, it was just a hard no-go. I mean, and it was a hard no-go because even if they allow for their partners or their members their corporate partners or public-private partnerships to come into effect, it just still did not make financial sense to be able to serve these rural areas where there may be a density issue, there may be other high cost issues that just really didn't allow for them to invest. And so they had to back out. And what the big concern then is that if they back out, who is going to reach that last mile? That customer that's at the end of the line, where we're start talking about miles per customer instead of customers per line. And so MSBA just felt like this was a great fit for us and a great fit for Mississippi's citizens to be represented and be reached. And then talking about the next part of the performance bonds, and I'll say this and we'll drill into it more in a minute, but the work's not over. We've got some really good alternatives that we've able to get some crack in the door at NTIA. And I just want to, again, say thank you to the leadership there, Alan Davison, as well as the others that attended the meeting that day, Kevin Gallagher so just to listen and to allow for those alternatives to come in. But now the work kind of begins again. And so what MSBA is working hard on is two areas, is the performance bond, making sure that we're able to bond these contracts at the local state level as these broadband offices roll out these contracts, because we could create contracts that are just too cumbersome or there's too much exposure where we could really run up the cost of these performance bonds. So again, MSBA's interest in this was to ensure that we reach and invest as much money in infrastructure deployment versus overhead of the grant. And so thank you for having us, and just I appreciate what we're doing. It's a group.
Well, awesome. Now I have to eat a little crow here. Elizabeth Bowles, we are so excited to have you, and I didn't introduce you yet. And Elizabeth, in addition to being the CEO of Aristotle Unified Communications, a hybrid fiber fixed wireless broadband ISP in Little Rock, Arkansas, she has been passionate about affordable broadband service for rural areas. And in addition to a lot of work with WISPA, I believe you're a former chair of WISPA, her most recent, well, actually not her most recent claim to fame, but one of your claims to fame is serving 2 terms as chair of the FCC's Broadband Deployment Advisory Committee. That hasn't gotten as much attention with all of the attention around BEAD, but that was kind of where the action was 5 years ago. So Elizabeth, I'm sure that kind of got you attuned to a lot of these issues. Tell us a little bit about how you got involved in this issue and your thoughts on where things go next on letter of credit performance bond issues.
Absolutely. So I don't even know where to start, because this is the culmination of what has been years worth of attention I put towards this issue, going all the way back to when Aristotle first won CAF 2 funds, and there was a letter of credit requirement out of the FCC had a letter of credit requirement there. And then we subsequently I was on the BEAD Act, Broadband Deployment Advisory Committee, during the period of time when RDOF was being fleshed out. And I spoke with the commissioners at the time about the letter of credit requirement, how burdensome it was, the problems it put on small providers. And there were changes made to the RDOF letter of credit to make it more palatable that didn't exist in CAF as a result. And probably a year and a half ago at a WISPA event, I said, I may lose this, but I will go down fighting. This letter of credit requirement has no business in BEAD. So I'm extremely grateful to this coalition and to the fact that everybody who came in, who made this, actually 300 people signed the letter. 300 people signed the letter to NTIA. And it made an impact, because I will say this, the federal government, it's not that they're trying to do anything to make life hard for small providers. They just don't know. And when they got informed, they moved. And I'm very grateful that that happened. I agree with Quinn. The fight is really not over. It's very possible to create a bonding structure that would actually be more difficult for small providers to participate with than even the letter of credit requirement. And I think it was John who said this. No, I actually think it might have been Drew. I apologize. Somebody said that the difference between the match and the letter of credit is that the match augments the amount of money you're getting, and all the letter of credit does is remove money off the table that should be spent on broadband. And when you're looking at billions of dollars, you're looking at hundreds of millions of dollars, and those hundreds of million could bring broadband to the people in areas in Arkansas, Mississippi, and the places that my company serves. I mean, out of the 14 counties we serve, 12 of them are persistent poverty. So affordability, getting these people served, is extremely important. The sentence that John brought up about the states having flexibility, we do need to take this to the states. Everybody needs to be talking to their broadband offices. The states have a lot more ability to influence this process than probably they even realize. They feel that they're being told what they need to do. They feel that they have to do what NTIA is saying. And that one sentence gives them permission to come up with a solution that works for the providers in their state. And just to echo this other point, I think a lot of what moved the needle was the fact that this impacts small businesses so much more heavily, and 100% of the minority and women-owned businesses in this industry are small businesses. And so you can't have a program with equity in its name and basically exclude the people that you're trying to get involved. So I think we're very much in the right place. I think everything's moving in the right direction. I do think there's more work to be done, particularly at the state level. And I have a lot more to say, and I could talk about this for hours. So I'm going to stop there.
Yeah, we with the dream team, we got a lot of views. So let's move to our last 2 speakers, Calum and then Charles.
Hi, folks. Drew, thanks for bringing this together. You said up top that you felt bad for only having heard of Connect Humanity a year and a half ago. Connect Humanity hasn't existed much longer than that, so I appreciate you as a supporter of our organisation. So as an organisation, we support small and community-focused ISPs with capital, with grants and investments to the kind of organisations we think can bridge the digital divide. And about 6 months ago, our Chief Investment Officer, Brian Vo, who regular watchers of Broadband Money will know because he's been on this forum, did a piece of analysis which basically showed how big that financial barrier was between the match and the letter of credit to small and community-focused providers. And it was really clear that the letter of credit requirement would be a showstopper to most of them to participate in BEAD. So I put that together in a blog post that made the argument that this isn't just a problem for those providers, But this is a problem for the program at large, because unless they're involved and unless they participate, these funds will not reach the communities that most need them. And similar to John's experience, when we put that out, the response was just massive. It was and remains the most read Think Connect Humanities ever published. So that told us that the scale of the problem and the amount of concern around the industry was just massive. So at that point, I linked up with Phil and with Elizabeth, and who, along with Drew and others, have really had been raising the flag around this for a long time, and this coalition started. And just 5-6 months later, we've delivered change, and it's not everything. And I know a lot of people, including myself, would have wanted the letter of credit to be removed altogether. But we needed to do something pragmatic, and we needed to do it quickly. And we got what we asked for. We asked for a performance bond. We got a performance bond. We asked for delayed reimbursement. We got delayed reimbursement. And I think the barrier, that financial barrier, is a lot lower now than it was in spring and summer. And I think everybody on this panel and everyone that's been coming to the weekly calls of this coalition, and everyone, the 300 organizations that signed that letter, have all achieved this together and should be proud of that. The work's not over. There's still lots to do. But a huge thanks from me to everybody who's given some of their time and their efforts to raise the profile of this issue and get through to the NTIA and deliver this change. So just to echo the others, as well as the four changes, I think this line, giving states flexibility, is just massive and really broadens what's going to be possible with the program. So I will cede the floor to Charles.
Awesome. Let's hear your comments, and we'll dive into discussion. Charles, over to you. Make sure you're off mute, though.
All right, that better.
It is.
Drew, thank you for putting this together. And I too want to echo what everyone else has said. Big thanks to NTIA for listening, especially Alan Davison. I felt like when we walked in that he was really concerned and wanted to hear. And just speaking from a small ISP that's been working in these rural areas, the first thing when we looked at the BEAD NOFO was that we're not going to be able to participate. They're shutting us out again, another federal program that's shutting us out. So I immediately reached out to my colleagues at WISPA and just started looking around. I met, I heard Phil and Elizabeth speak on a webinar. I reached out to Elizabeth because I had started a Closing the Digital Divide podcast. And it really came home when Elizabeth walked through that process. For a $20 million project, we would have to sit about $3.7 million in a bank that we couldn't touch, that we would have to pay fees for, and it would just take away from any ability that we would have to participate in this program. And so I immediately got involved. I asked Phil, Elizabeth, what can I do and help to, as a small business service provider, what can we do to help push this along so that we can participate? I know in speaking to my colleagues at WISPA, one of the things that we talked about is we want this to be a success. We want BEAD to be a success, but it can only be a success if everyone gets to participate. And so my colleagues articulated the dynamics of what the letter of credit meant. So I'll keep my comment short and move on to the next stage.
Awesome. Well, listen, I have to start off by saying, many of you have thanked us for putting this together. The thanks go to those of you who are in the broadband community and making these comments, because that's what we actually look to. And again, I had very little to do with this. Benjamin Kahn, who's kind of the silent screen on here, he's the one who kind of helped put so much of this together. And I really want to thank you for being part of the community, because that's where these issues have been percolating, right? That's where we know that there's progress and there's ways to get at it. So the thing that's on a lot of people's minds, several of you have mentioned it, maybe Calum, you mentioned it probably as directly as possible. This is a big win. Performance bond. Let's go back. What is a performance bond? How will it impact small, mid-sized applicants for BEAD? How is that different from the requirements that sort of still are a name on a letter of credit? So who wants to dive in? Just either raise your hand or click your virtual hand, so I know, because we got a number of people here, but definitely want to hear, what is a performance bond and how will it impact applicants as they put ready their BEAD programs? Phil, go for it. Make sure you're unmuted. Yeah.
Unmuted. Okay, great. Yeah, so a letter of credit, basically, by and large, the bank's required to be fully collateralized. So you have to have that cash. And at the time you sign the grant agreement with the eligible entity, the state, as a sub-awardee, you have to take that cash and it goes into a bank account. With a performance bond, you don't have to take that cash. You don't have to have that cash and put it in a bank account. What they will do is they'll do due diligence on the ISP and they'll evaluate its financials, who owns the company and what they're doing, their historical, build out and their completion and the type of team that they have there. And they'll look at that and they'll say, okay, we will support this project, and the performance bond will basically ensure the build of that project, and you'll pay a percentage for, the build out. So instead of having all the cash up front and having to put that and fund the letter of credit and collateralize it, you are able to avoid that. So you can keep that cash and put it towards your build versus it being just, put away in an account. So that the performance bonds allows that, but you're still going to be subject to due diligence from the insurance company, the surety, who's going to evaluate your company and be the ultimate decider about how the performance bond is structured. Now, we still have issues that we have to address relative to that. Designing a performance bond, which, as Gigi mentioned, the one that is involved is 10% of the award amount. How do you design a performance bond around that? But I spent a bunch of time this past week with sureties, bonding companies, and others about how this could be conceivably designed, and they're all working on it right now. So I'm hopeful that we'll hear more on this.
But you've well stated the difference there. Quinn, you've got your hand raised, so go ahead. You got to make sure you unmute yourself before you start talking.
Sorry. I do want to echo the difference there that when we park capital, it does the economy no good. Anytime that we are parking resources, it really takes away from network builds. The industry is used to working with performance bonds. Elizabeth and I have talked about this a lot, especially from the ISPs down to the contractors. Contractors already are in this day in, day out, ensuring that these builds are bonded and there's sureties around their performance. What's the difference here is that the entity that is being bonded is back to ensuring federal tax dollars. And I think everybody on this panel here wants to ensure that we're protecting our federal dollars and investing in companies and groups that will be able to not only build, but sustain these networks. The difference, in my opinion, and why performance bonds make more sense than letter of credit, and again, Elizabeth and I, we spent tons of hours talking about this. A letter of credit just says they have the cash in the bank, but it does nothing to ensure that they're a reputable business. It does not ensure anything to make sure that they can operate and manage a network, that they have the right partners in place to be able to perform. And so really leveraging a performance bond or a surety market bond is really the due diligence that is poured into the company that is looking to write the bond and that relationship with the ISP. Ensuring that we're really digging into, can this company, are they financially able to do this? And if so, that's great. Do they have great partners that can come up with a 25% letter of credit? Matching funds. So it really digs into their abilities both during and after deployment. But the last thing that I want to say on performance bonds is that, and Phil hit on this, the work is just beginning. And so we've got to ensure that these states are putting language in their contracts that can be bondable. And so I see some states on there asking questions about the process. I would ensure step one is we need to wait a minute. And the wait a minute is that the industry, the surety industry, is got a white paper out there that they're looking at how can they bond these networks, and they're working through that. But step two is going to be, let's take our state contracts, and Mississippi is willing to be number one on this, and we'll be glad to be the guinea pig working with our state broadband office, is to ensure that these contracts are bondable, because there can be too many teeth, there can be too many requirements, there can be so many issues with these contracts to where that the cost of this performance bond, as mentioned earlier, could be as much or more than a letter of credit to the build out. So working in those areas. So that's kind of really important.
Thanks for raising hands. I see Gigi's hand raised and John's raised. Let's continue on this performance bond and thoughts you have on it. Go ahead, Gigi.
Well, I wanted to emphasize something that Quinn just said. So NTIA really had two goals with the letter of credit. One was they saw it as some indicator of financial viability of the entity, and two, they want to make sure that if, God forbid, the network doesn't get built, then they can remit the money. There's some sort of pot of money that they can, hold the taxpayer whole. But I think they were incorrect, and I think the RDOF is a perfect example of where there was a letter of credit requirement, and it didn't mean jack when it came to the financial wherewithal of a provider to build the network. And unfortunately, and this is another issue, I know you want to talk about, other issues around the B program, but I think a huge issue is the number of RDOF grantees that are going to default, yet their areas are going to be taken off the map because they're considered served. So that assumption, number one, the assumption that the RDOF program was a good one to follow, I thought was flawed to begin with, but that have a letter of credit was somehow a demonstrator of financial viability was also flawed.
All right, great points, and that is a really good issue for another conversation to dig into, the failure of RDOF and the failure of CAF too. We just put out a report today on Broadband Breakfast about how badly misspent CAF 2 funds were. So we won't go into detail there, but thank you for raising the RDOF question. John, let's hear from you on the issue of performance bond.
Sure, thanks, Drew. Now I'm going to say something a little bit different. But I think that this is helpful about the performance bonds. Now, I'm not a banker or finance guy, so I listen to others. They say getting a performance bond is better than a letter of credit, and I trust them on that. But to be honest, I don't even understand why a performance bond is necessary. And let me explain why. When we had Joey Wender come to our conference a couple of weeks ago, he's running a similar program at the Treasury Department. And they're administering $10 billion, and Joey has awarded about 90% of that funding already. And he was asked, well, how much of that money has he actually sent out the door? And the answer is zero, because he does not hand over a check to the winning applicants for that funding. He only pays the money as a reimbursement after the network has been built and the expenses have been incurred. So he doesn't need a letter of credit. He's saying we don't even need a performance bond because we're not going to lose the government's money. If some broadband provider doesn't follow through and build the network as they're supposed to do, then they don't get the money. So I would just like to encourage states to consider reviewing the financial integrity of the applicants, but I'm not even sure a performance bond is all that necessary if they're using a reimbursement approach. And I think that could satisfy NTIA, again, based on that language in the blog post that we posted earlier.
Great. Let's stick on performance bond for another minute or two, although I want to turn to the delayed reimbursement question. Elizabeth and Quinn, are your issues on performance bond?
It's on delayed reimbursements. So if you want to hold, I'm happy to do that.
All right. Quinn, is yours on performance bond?
Yeah, I think the issue in my statement on that is that NTIA was not going to move in this guidance away from some type of guarantee for the American tax dollar. Now, as we move forward, how do we encourage those states, as John just said, to request those waivers in that language that was later? But performance bonds we need to look at this list as alternatives, as what they are. You know, some companies that are just used to performance bond, they want to pick them, they want to move forward with them, so be it. You know, if it's the letter of credit, there may be some companies they're strong enough just to throw the letter of credit out there and want to move forward with it, so be it. You know, those type of things. So what's great is that we got options and we have alternatives that we can begin to work on, and maybe, like you said, John, and then move forward as we encourage the states. So just wanted to say that real quick.
It's awesome. Let's hear from Calum on the delayed reimbursement issue. Why was this so important? You highlighted this as one, and then let's hear from Elizabeth on that point as well.
Just quickly, it's as Quinn said. It renders, or was it John? It renders the having to put that collateral up just unnecessary. You know, between the match and delayed reimbursement, we felt no more belts and no more braces were needed. And I know that Elizabeth can talk much more about this, so I'm just going to pass over.
Elizabeth. Go ahead, Elizabeth.
Sorry, I was muted. Yeah, I think that what Quinn said is exactly right. And the pushback that NTIA had on just going straight to the model that Treasury had is that the states are in the middle. So they're giving the money to the states being reimbursed by NTIA. I think it is within the state's capacity and authority to structure a reimbursement program that would satisfy the concerns of NTIA. And as a company that's looking to participate in these programs and would like to go after this funding, I would enjoy that. I would actually almost rather a reimbursement program than where I know that I can meet certain milestones and get reimbursed as I meet them, rather than having to come up with 25% in cash, plus whatever the bond is going to cost, plus all. And, side note, this stuff is taxed. So when you're looking at getting a $10 million award, and this is in the blog post that Calum posted, I strongly urge you to read it. If you look at getting a $10 million grant award, you have to come up with 40 to 55% of it in cash. So it's really, it's a $10 million project. So from my perspective, the reimbursement is really a very elegant answer to solving the problem sort of writ large. Whereas you wouldn't need a performance bond in that circumstance, or rather, I should say, you shouldn't need a performance bond. You don't have any programs that have a match and a bond and a letter of credit and a this. All of those things are intended to protect the program. Making sure the provider has the money to perform is covered by the match. Bonds ensure performance. Reimbursement ensures that the government got what they paid for. It's built before you get your money. And so from our perspective as a provider, we think that the reimbursement perspective really needs to be taken. And I think that NTIA has opened that door for the states to move to that model.
Yep. Any other comments on this performance bond question? We do have another really good question from our audience.
I wanted to put some meat on the bone with that, Drew.
Please.
Of what Elizabeth just pointed out. There's various ways you could have states could construct a program with delayed reimbursement without having a performance bond. For instance, if you had a community and you have 4 subdivisions, and every time they completed a certain subdivision or something to that effect, and they could demonstrate services being provided, then they get reimbursement, and then there's no need for a performance bond at that point in time because the service is done. And as Joey Wender said, and I was right there, I was at AnchorsNet when it happened, and Joey said, You know, when you get a deck built on your house and they build the deck, you look at it and you pay your contractor and it's done. And that's what his expectation was. So this is a way that states could possibly do that, and it's good that we have the flexibility. NTIA gave states the nod to make this type of flexibility. I already know with capital projects that this is already going on. Where I have a client that they seek reimbursement, they have to show some testing that the service is up and running. So it's something. There is a model out there that's already being utilized.
Great. I saw Charles with your hand raised. So go ahead, Charles.
Yeah. So if I could comment just a little bit on the reimbursement, Virginia has been working the reimbursement model for several years. And it has worked really well. Now they do through their VATI process, they do require a 10% match, but that is not as onerous as the letter of credit. And we work through the process. We get part of it built. We get reimbursed for that part, just as Phil had explained. I would recommend states to give the state broadband office at Virginia a call and allow them to show them their template for the reimbursable model, because it has worked for years. Now they've adjusted it a little bit over the years, but it has worked really well.
Great. We do have a question here. This is from Halle Overseth. Does anyone on the panel have resources for those of us states who are planning to submit waiver requests for the letter of credit and the match requirement? Having language aligned with the panel's message today may be helpful in continuing to shift the NTIA requirements on a state level. Does anyone want to address that question?
I would like to. What I think our goal as a coalition, or even as an industry, is that we have to ensure that these states invest these funds with companies that are going to be able to perform. And so, with working with our state office and really looking at, there's going to have to be some guidance that we as a group can come out and put together, and finding those programs like Virginia and like what Charles just said, the places that have done it and done it right. But we got to remember that these states are also held accountable for the performance of these investments. And so they're going to want ways in which they're protecting their state allocations. And by just, asking for a full waiver on some of this stuff, we've got to understand that some of the states just don't want to do that. Mm-hmm. And we're going to have to advocate to them the importance of some exposure, especially in those high cost areas. Because if you look at the way BEAD is written, the 25% matching fund is the 25% is a requirement, but you get points for going above and beyond that. And so you kind of really need to take that off the table and what the states are going to do there, and really focus on this delayed reimbursement or performance bond or whatever it may be, and providing them guidance that makes them feel comfortable with their decisions. And so the industry, I think, it's not a time to be quiet. It's a time to speak up. Right. To help them, guide them through the process.
Well, by the way, Halle is from the state of South Dakota. Thank you so much for being part of the broadband community and for raising your question. We have another one from Colorado, Attorney General's office here, Judson Carey. Colorado runs capital projects funds and all of their grants on a cost reimbursement basis, which is allowed to layer on top of a fixed amount subaward type grant. But a performance bond, maybe less than 100% and as low as 10%, allowed under Bullet 4, would still serve the purpose of ensuring the project actually gets built if the ISP goes belly up. We have obviously so much good stuff here, and unfortunately so little time. So what I'm going to ask is, let's give everyone on the panel a chance to offer 30-second closing remarks around this theme or anything else you want to raise that will help advance this discussion going forward. Let's go in the same order we started with. So Gigi, will you kick us off? And make sure you're unmuted, please.
I really appreciated hearing from the South Dakota Broadband Office. I think we have another task for our coalition to do is to provide some guidance for the state along those lines. So I look forward to continuing to work on this issue, and again, continuing to work both with NTIA and the states to make sure that the folks on this call and my members can participate in the BEAD process.
Thanks for being with us, Gigi. Go ahead, John.
Thanks, Drew. I'm going to use my last comment here to really ask a question that could be a really important one for, I think, Elizabeth. Elizabeth, were you suggesting that with a reimbursement program that the recipient of the funds would not have to pay tax on the funding? Because if that's true, that could make those BEAD dollars go a lot further if the recipient does not have to pay tax.
Let's get that answer when we get to Elizabeth in just a quick moment. And John, you're raising a very important other issue. We've kind of gone through many issues. The Buy America requirements kind of sort of resolved. The letter of credit now appears to be resolved. So that may still be another one, but I look forward to the perspective on that. Let's hear from Phil and Quinn, and then Elizabeth.
And John, I'm going to jump in on your point from earlier. I have a meeting this afternoon with Senator Warner's office, and we're going to be talking about S341, and that's the Tax Savings Act. So these broadband grants aren't taxed. It just is kind of sitting there idle, and I'm hoping that there's be more activity on this. I don't know. I understand why there hasn't been more activity. Why are we taxing these broadband grants when they should be using that money and putting it into the ground? So, the group is still working diligently. We have work to do relative to on the performance bonds and making sure that they fit appropriately for this program. And then in addition to on the reimbursement area, I think we need to be working with the states there and see how we can design reimbursement so that there is no need, and it obviates the need for a performance bond if you have some certain milestones met, completion. I don't know how you want to characterize it, but people are satisfied, and you don't have to have a clawback mechanism that's out there in the form of a performance bond or a letter of credit.
Quinn.
I would like to say is that we do have to ensure that these networks get built. And we have to make sure that we are doing our part as a coalition, but also industry leaders to guide our state broadband offices or give constructive criticism back to them on their volume 1s and volume 2s. So I encourage people to be active. At 3:30 today, MSBA is hosting our weekly Better Together call. I've actually posted on broadband.io with our state director, and she's going to go over volume 2. And so being positively encouraging and constructive to your local broadband office through this process and having that open dialogue is going to be key to the success of not only your state, but this nation.
All right, Elizabeth, definitely want to hear your answer here.
Yeah, so I am not a tax expert, so take that there. But we did receive money under CARES Act, and I was very surprised to learn that when we received that money sort of up front, that we had to amortize it out over the life of the usable life of the asset, which means that we're taking amortization on money we didn't receive, and it skews the books. It's really confusing, and it's totally unnecessary, but it does have to do with taxation. So I don't know that reimbursement gets you out of being taxed, but I do think that depending on how the reimbursement is structured, it may change the way the funds are taxed, which would be more helpful. That said, these funds are taxed on a state and federal level, and I think it's very important that that not be the case. I think that you have people who it's sort of like the one hand gives and the other hand takes away, and that tax rate could be very high. So I think that that's a whole nother sort of battlefield, but I do think that on the federal level, I know that at least the state of Arkansas is considering about removing state tax, but these are taxed. All these grants are taxed right now. And that's all my time. I have a lot more that I would say, but I put in the chat. I think it's very important that providers have options, and that I encourage the states to consider creating a menu of options that providers can select from, because any of the options you're choosing will protect the state, but we win the more people that participate.
Great point. Well said there. Okay, final quick comments from Calum, and from Charles.
Thanks, Drew, and thanks, everyone. Yeah, I guess two priorities. Make sure the performance bond works and is practical for these providers, so it's a real alternative to the letter of credit, number one. Number two, yeah, make sure states have the support and the guidance they need so that they can make these waivers work, and to Elizabeth's point, so that they can offer this menu of options. This group will continue to work on both these fronts, so if you have things you need or questions or want to reach us. I'm sure you know many of these people on the call. If not, my email address is calum@connecthumanity.fund, and we'll discuss and work to do what we can.
All right, Charles, you get the last word. Unmute yourself, please.
I'm just going to echo real quickly what Quinn and Elizabeth said. You got to get involved. When I first read through the NOFO a year ago, I didn't know what to do, but I just started reaching out to people and talking to people. I never thought that would end up with a meeting down at Department of Commerce at NTIA, expressing to Alan Davison how troublesome or how challenging this letter of credit would be. So get involved, and we have to be able to give our small and mid-size ISP service providers options. That's how we are able to move forward. We've been doing this for years and years and years. We started at the ground with nothing. We built up these networks. Now we want to move forward and continue to give the great services that we've been given. And so you got to have those options that allow us to do these things.
Well, with that, we're going to go ahead and conclude the meeting. Thank you for being with us. Just go ahead and leave now. I'm sorry to have to do it that way, but we will see each of you more, and continue this discussion. Thank you again for being with us and spending this time in the broadband community.
Thank you, Drew.
Thanks,
Take
Drew.
care.
Bye-bye.
Bye-bye.
Thank you.